Hi, this is Graham Bibby on the 10th of July 2015 for your weekly global market roundup. All things Greece, China, and the market volatility in general. The chart in front of you right now is the Shanghai Composite Index, and I think China is a bit more of a concern to people than possibly Greece. Greece, we've delayed the inevitable, whatever that may be, till the weekend. But I think people are more concerned what's happening with China because the stock market broke out last July, and the chart in front of you, where I've got that circle. If you can see, this is my little arrow floating around, and here's the circle. That's where I signaled the breakout in China, especially in our Insider Club FOS service. And then it ran up all nicely until mid-June, and you can see the collapse in the market um, quite dramatically, and we've gone back to uh, basically the beginning of year levels, which a lot of markets have done, and a lot of markets are below year beginning levels. So that's the initial concern, and then we need to look at further afield. This is Germany, and that's below beginning of the year levels. And where we know Warren Buffett and certain other high-profile investors were saying, move your money to Europe. But if you had, depending on your timing, you've probably lost money. The market to me seems to be holding up remarkably well, but I am concerned about a few things. This is the Russell 2000, which is 2000, and it's more smaller company in nature, not real small companies, but smaller in nature. Um, I was hoping the 1250 level would hold, but we now hold by the 1225 level. And what's important is we broke out of this big trading range here. We've had a bit of a scare in April, and then we seem to be in this nice trajectory upwards. And this breakout here in June was really powerful and should have meant we have a lot of upward action. But the current psychology is concerned, so we had this big pullback. But again, I think if the Greek situation and China situation stabilizes, then we will see some upward momentum. This is the Nasdaq, and this is broken below 5,000, which is a really important level. This shows you here how difficult the market has been this year, because we were breaking out to the upside in June above these highs, which is normally very bullish from a technical standpoint of view, and then we corrected back, found support around the 5,000 level, but we kind of turned over. So that's not great. And if we start to go down from here, it'll be more of a negative sign. However, when you look at things like Facebook, for example, which we sold here in April as it broke down, then the new trend started again and we rebought it. It's held up very, very well above 85. Last night, mixed reaction. I mean, it was up, but I keep telling you about these spread levels. This is the spread for the day, the high and the low. And if we go over here, it says the high for the day was 87.60 bar high. You see, it says below that. And the low for the level for the day, sorry, was 85.65, and we ended up marginally above that. So the stock is up 0.27 for the day. It looks good because it's above this resistance level. So if it stays above that, I think Facebook will be on a terrific run. Certain other stocks have held up, like Skechers, held up very, very nicely. Some of our old favorites, like Skyworks, really got hit. This is the downtrend from 110, and currently it's sitting at 94. That's about a 14% move. Really, I think it's just people taking profit and being cautious. So overall, is Apple, again, it's broken down. It's at a support level of 120. So let's see if that holds. It's a great pity that it broke out to the downside of this support level. So right now, the trend is your friend. The markets can move either way. I think the markets have held up very well in the face of this negativity, which, as it has, then I think there could be an explosive upside move. I think there's a lot of people on the sidelines. So for me, the trend is your friend. And over 30 odd years, the trend hasn't let me down yet. So If more and more stocks move into downtrends, as they did in 2008, we would move out and then see where the market goes. But if things get resolved and we're breaking out to the upside, I keep repeating, I have the best undervalued superior earnings list in my watch list, and I'm expecting to see either very soon, or if the market decides it's going to turn over first later this year, really good upside move. So Graham Bibby on the 10th of July 2015 saying you got to be in it to win it. If you're in the Insiders Club, I'm watching your holdings every single day. I don't know what your other advisors are doing, because normally they do quarterly asset allocation reviews or 6 monthly asset allocation reviews or 1 year asset allocation reviews. And I think that type of methodology and inverted commas management is not for today's markets. I also think it's very difficult for do it yourself. So if you're out there, you're wondering what to do, your stocks are in a mess, or even if they're great, and you'd like someone to take a look at them, the offer is still on the table for a free review of your existing holdings, ceo@richmondth.com. And if you've just got your money in the bank, for sure, you're not really going anywhere. And in fact, in most countries, you're actually going backwards. So Graham Bibby here saying, look, the weekend's coming. Have a great weekend, and let's look forward to some better news and upward trends next week. Bye-bye for now.